Alrighty, good morning, comment allez-vous, how are you? Welcome to Forex.Today, the YouTube community of more than 20,000 people just like you, a foreign exchange trader. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. My name is Wayne. What do you want to do today? Risk on, risk off? Please answer the poll down in the YouTube chat. We have an amazing amount of Fed speakers today. I don't even know if they can fit them all on a calendar, but I think like 9, right? 9 FOMC members are speaking today. It might even be more. Holy smokes. So lots going on today. We had the Jerome Powell speech recently, and he didn't put his foot on the neck of the stock market. He didn't say, "Hey, I need to kill you to get my goals done." So that's kind of interesting. Today is Wednesday. We have oil inventory, so don't forget my WTI. I suggest we go through not just dollar pairs and yen pairs, but gold, oil, and Bitcoin. But we can go through all the different stock markets. We can go through several different cryptos if you want. We could look at silver or palladium if you want. Okay, we can go over Brent as well as WTI, and we can take a look at Natty. So, I'm not just a male supermodel. I'm also your servant. So let me know how I can help you. If you ask, you lead the conversation. Yeah, sometimes I get pulled off topic and we end up talking for an hour on fundamentals, but it's usually something that you lead. We can just do the technicals and burn through the charts, churn them and burn them. That's fine by me. I love technical analysis. I love scalping, spot, swing, carry position, maybe even structured. So anyways, there's a lot going on, yo. And yeah. So you lead the direction and I'll do all the work. How about that? Below the video, there are links. I want you to click on them. The first one is to my book, Strategic and Tactical Forex Trading. I assume you already bought it. It's an honest book. It's an entertaining book. It's a valuable book. It took me a year to write it. I got carpal tunnel syndrome from writing it. So years and years and years and years later, I still have pain. So with all that being said, I don't think you'll get carpal tunnel syndrome for leaving a review, and I don't think it's going to take you a year. So would you please leave a review? Because I'm in the process of writing a new book, and I'd love to stay motivated while going through the process again. It'd be nice to know if you care. That it's the whole pain and time and suffering and sacrifice is worth it. So let me know by leaving a review. I'd like you to join FX Bootcamp. Why? Well, I want to drive a yellow Lamborghini, and that's how gurus do it. But you might actually find it helpful. We have live groups. We have a video-only membership, so you can go through almost 100 hours of training for $88. So you got very little to lose and a whole bunch to potentially gain. So FX Bootcamp, I highly recommend it. I've been running it for 20 years. It's good. Trust me, it's good. And then Trader's Way. Their trades, they don't trade against you. They actually enter your trades into the interbanking system. They do it quickly, they do it affordably, and they pay you the swaps that you're due. That is actually quite rare. But then you add trustworthy and ethical. TradersWay.com, I recommend them. Don't even click the link. If you're worried about me saying stuff like this so that, I don't know, so that you get tracked, or maybe I earn a commission or something like that. I don't earn a commission, so don't even click the link if you don't want to. If you don't trust me, try just typing in tradersway.com. You don't have to mention me. You don't have to use a link. You don't have to put in a code. I recommend them, dude. Try them out. See if they can earn your loyalty and respect, huh? Okay, let me get the chat. The chat's a little squeezed here. Hang on a second. Un momento, por favor. All right. Thank you, everybody, for being here this morning. Let's take a look. We have enough. Let's end the poll and see what's on your mind. Okay. Okay, let's see. So about half of you are risk on. The other half are sort of, not risk on. Okay, that's cool. Yeah, so the tone, I think, for the risk on has to do with the Fed not pushing back on the stock market, like I said in the intro. Jay Powell could have said during the interview that, well, you know, we all need to go through pain if we're going to fix this situation. Oh, my God. Okay. But he sort of played it like a Goldman Sachser. Goldman Sachsen. So anywho, a little bit of dollar weakness coming out of that, which makes sense. Little bit of yen weakness. Okay. And typically when you see yen weakness and dollar weakness, that's risk on. Okay. So if dollar's losing some strength, you would expect euro and pound to regain some. Okay. Aussie potentially. Okay. Aussie potentially a risk on trade, a China reopening trade, and you would want Aussie dollar long, but make sure you're not in a situation where you're fighting the dollar, or Aussie yen long, or Aussie Swiss franc long. And they may not be presenting themselves, their true authentic selves now, but your goal as a trader is say, okay, not today, but maybe tomorrow, maybe next week. And always be thinking 3, 4, 5, 10 days in advance. You see? So make your work today, like every day. Make your work be, you know, what are you going to do today, which means you've already set this up yesterday or the day before. So what trades are presenting themselves today that fit your narrative, but also what's next week going to be like? What's the next trade? You shouldn't be looking for what do I see now and that's that. What do you think will develop next week? And put that on your radar so you always have future projects. Future projects might be Aussie Swiss franc long. And you're like, well, that's not now. I know, hey there, boo-boo. You got to get the pips from the big new basket. Let's take a look at the stock market. Okay. This is a Nasdaq long off the press conference yesterday. And I talked about this in our day trading group last night. And I'm like, yeah, I caught the scalp. And I think this, therefore I'm not going to take profit, because if I think that so strongly, there's a pretty reasonable chance I'm wrong. So I'm hedging myself by being long and profitable because I think short. So anyway, I caught it, and now what? Yeah. Caught it and ignore it. Okay. Look at the volatility we've had, though. Okay. You have this straight up followed by a straight down, followed by a straight up. And now, back down again. And you're like, yeah, but the 2155. Dude, this ain't trending. Stop thinking like a trender. What the chart says is all the way back down and probably take me out. That's okay. Now, maybe it just pops and goes the other way. I look at this like a dirty little trade. Like, I don't want to be in it, but I'm long and strong, so that's fine. So maybe it just does that because I'm so wrong. That's fine. If it comes all the way back, that's fine by me too. It's a dirty little trade. It's just a scalp. But what we see, what the chart is telling us, is that we're going to move sideways forever and ever and ever and ever. Okay? So think of it like if we drop below here, at least we can think, guess I should just use arrows instead of drawing them. Okay? If we drop below here, we could just do follow-ups, or if it breaks above, we can do follow-ups, meaning then we get a trend. Do you know how to trade a trend? Yeah, if it's a downtrend, you sell lower highs. If it's an uptrend, you buy higher lows. And if it's moving sideways, you get run over. Like a freight train, lying like it never came, feeling like space brain one more time tonight. Yeah. So anywho, that's sideways. I'm not positioned very well. I'm okay. It's not enough money to take profit. But maybe I get lucky while I wait for a better setup. And that would be buying a dip. We're selling a rip. What else is going on in the world? S&P 500 kind of looks like the same chart. Okay, now this is much more of a trendy trend. Trendy trend. Okay, and maybe, just maybe, and the reason we use these moving averages is it takes us to the next. Okay. Now, here's what I think in the back of my mind, if you don't mind me talking about not quantitative analysis and not technical analysis. I think January was quite amazing, this move. I expected October, November, December to be somewhat up, but January, whoa. And a lot of this might have been wash loss sales and a bunch of other sort of tax issues. You know, there are a lot of different sort of things going on. But now we're in February. And I think about what would the dumbest traders do now? Fear of missing out, right? So they're like, oh my God, I could have bought Tesla at 108 a month ago, and now it's 180. Oh my God. So what do? They buy it at 180, right? Or whatever, pick your poison. But all the deals have come and gone, and now people decide to do something, and then we get some profit taking. Hua? I think that's something that could really happen. That the smart money will sell all their long positions to dumb money. So let's just say you bought a company back in November because it was trading at 15 times earnings. And now it's at 22 times earnings. And people are like, oh my God, I missed it when it was 15. So now I'll pay 22. And the smart money says, good, pay me. You can have my shares. You know what I mean? You know what I'm talking about? And then we finally get our late rotation back down to the downside. I don't know. So we got to reconcile this. Like the economy is doing great, but the Fed is probably going to have to continue raising interest rates. And so nonetheless, what we have is less rate hikes and then a quick pause and then a cut. That's what this is, for example. What that means is we stop at 5.25 in March. This is what this move up is saying. We go to 5.25% in March. Okay, and by Sep, we're back at 5, and by Dece, okay, we're back to 4.75. Okay, on our way to 4.5 to pause at 4.5, something like that, right? So that's what we have here, and now we're facing a double top. If we find out that this is wrong, then the math doesn't work out. The S&P 500 is overvalued. You have to change the model. So smart money will dump their positions on dumb money that have fear of missing out. FOMO. Okay? Now you need dumb money to unload your smart investments. Okay? Yeah, exiles, right now they're not afraid, but partially because some of this, duration is wrong, right? So we might be going out of 5.5 and people are like, well, at least it's not 8, right? The exiles. So they're like, okay, we're not going to 8. So whether it's 5.25 or 5.5, I suppose that's not that big of a deal. But this is wrong. So in the beginning, so now what'll happen is they'll have to shift to maybe we drop to 5.0 or 5.25 even, 5.25 in December. And then I think we'll also later on in the year find that that's wrong. So in my annual outlook, I shifted, by the way, this was January and I didn't know the stock market was going to be on this tear. I said the pain's going to be in the second half of the year. I thought we would have sort of a down and then a recovery and then a lot of sideways action and earnings collapse in the second half of the year. And then we have a big drop then. When it's supposed to be rallying, we have the big drop. And I don't know the future yet, but if the market thinks between, let's say, let's just write it, between June, okay, think of it this way, between June and December, if part of this narrative for up is the Fed cuts, okay, that's accommodative. That pushes the stock market up. So if you think it's going to go up in 6 months, will you buy it now? Okay, because the stock market is 6 months ahead. You're not trading today, you're trading the future. Okay, so if this is wrong, then this needs to be repriced, this asset. The model is incorrect. And so if it's a pause, okay, there might be some other outcome. So in that case, S&P 500 up, S&P 500 down, S&P 500 up, S&P 500 flat. Okay. So the only thing is you'd have to skew this. This happened in 1 month. This happens in 6 months. Okay. This happens in, I guess we'll say 3 months, and then from there, 2 months and beyond. And that's how your year might look, for example, right? And then now you have to just then say, well, sloped this way or sloped this way kind of thing. So right now we have to, what you need to be thinking about is that we are in this period in which the market is trying to consider what is the Fed going to be doing in the second half of the year. Okay? This is, let's say, we'll dumb it down here. No cuts. Okay? And the other one is cuts. Cuts like a knife and it feels so right. Okay? But credit is down. Nope. Well, I have lots of credit. Not for me, Richard. I mean, in fact, I'm getting too much credit. I'm getting credit up the yin yang. I'm turning down credit because I think that ruins your credit score to have all this credit you're not leveraging. So for some, maybe. Yeah, the exile says, hey, maybe the pain is next year. Yeah, maybe. So there's consumer credit where some people with consumer credit are defaulting. Okay. So that's not good. The average person spends, what was it, $700 a month on their car lease or their car loan? Holy schnickerschnocker. I think the number is we have 7 million people on welfare. They don't make any money. They're not productive at all. Okay, they're destructive, not productive. Which means they're not looking for jobs. They just get free money to live. And I'm not talking about unemployment. I'm talking about welfare. Unemployment is for those in between jobs that are like, oh man, well, I'm switching jobs and I need some help, and I've put money aside through the taxation, and I need some help while I wait for the new job. That's one thing, right? So anyways, wowzer. So yeah, some things are like. Singh says, what? Okay, what are you predicting? However, you reached a point that is, it's 6 and 3 months, but one knows okay. I was just trying to show the velocity, not the shape. The shape isn't that important. It's how quickly, right? So like we might sit in this range for quite some time, guys. And if we're looking at the fundamentals, in this case, the chairman of the Federal Reserve Bank talking about future policy, and it seems like there's no rate cuts coming. So if I were to look at that and I did the math, I would come to a conclusion. Because remember, math isn't wishy-washy. Now, if I have entered the wrong variables, then I have to adjust my variables over time. So I only know what I know now. And Chairman Powell seems to say no rate hikes coming, or no rate cuts coming this year. Well, then this model is probably wrong. This model is probably wrong. And there's going to be some version of down, is what I would say. But what I also just said is it's not likely to be quick. You know what I mean? Just, we'll slowly figure this out. And we're going to be stuck at 4,200 to 3,800, maybe all year. The next rally is maybe the pause. And that would, let's say, the June meeting or something. And then we go into summer and we get our little summer rally. That's fine. I'm okay. I'm still going to try to play seasonality. Anyway, so there you go. There's your leading indicator, so to speak, or your not a leading indicator, maybe just a canary in a coal mine. You just don't believe the rally. Well, don't have any beliefs. Okay. I guess that's not fair. Because you have a bias, and I guess that's probably what you mean by belief. So you might have a hypothesis where this should be heading down and not up. What we know to be factual, and that's why I pick on the word belief. There's no belief. They're just as fact. This is bullish, and it will remain bullish forever until it changes. Okay. That's that. So, I participated in this down because that's what I expected. I participated in this down and that's what I expected. What I didn't expect was this. So now you got to wait. And I tell you, being a trader takes patience and discipline. And you're like, yeah, sure. Good. No, but I mean it. So now you got to wait and wait. For the market conditions to change if you're a bear. And it may never happen. This may go up forever. So do you get fear of missing out? Okay? The fear of missing out is for the weak, the sick, and the lame. And by lame, I was going to say stupid, but I mean lame, meaning they haven't done the research or the work. And so all of this is just reactionary and emotional and chasing price. So I'm just like, dude, you deserve to. I mean, that's who loses. So we need those people to, right? Think of it this way. If you had just played it out, okay, buying, let's say, down in here, you need somebody dumb to buy those positions from you way overvalued, don't you? Imagine you bought a company and it was trading at 15 times earnings, and now it's trading at 22 times earnings, and you know it's overpriced now because you're like, well, that's an over prediction of future profits. It's totally worth 15 times, but it's not like 22, especially if you have a bit of a negative outlook for the future. So you need some idiot to overpay to buy it from you. Remember, when you sell it, you have to sell it to somebody else. So you kind of need somebody with FOMO. You're like, right? Oh, I'll never get the opportunity to own IBM again. Here, take mine. So. right? Okay. Like, think of it this way. You guys know Baidu? One of the Chinese ADR stocks. If you bought Baidu in this period down here, when we were talking about China reopening, what's the China reopening play? And I'm like, well, maybe Chinese ADRs, they're down 90% or something, right? So anyways, if you bought Baidu, which is a Chinese ADR, it's a Chinese company, and you sold it here, you're well over 100% return on investment. But now you need someone to buy it. Why would they want to buy it? Well, now they're interested in buying it. Oops, not 1,000, sorry, 100. Why do they want to buy it from you now? Well, because they read in the newspaper that it's up 100%. So what will happen is they'll buy it from you and everyone else will dump it. Then it'll come back down to reality and then it'll go up in the second half of the year. You know what I mean? Oops. So you need fear of missing out. You just not, you don't want it, but you need other people to have it. So anyways, look at this. Bullish, 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 bullish. Still bullish, son. All right, let's do gold, oil, and Bitcoin. Back. Cut, you're looking for the same thing. It's a new thing. Check out this Supreme. I'm living low next to the base. Turn up the radio. Yeah. Yeah. Wow. What a change in direction. So remember today, we have oil inventories. So get ready for the EIA. Okay. This is risk on like all those other stocks. So we got to the inflection point yesterday and then the Jerome Powell speech. Okay. But also, if we go back, look, this area was the potential sell. Okay, this area here was the potential sell if you're going to try to continue. But remember, we bounced off key levels of support. So we had plan A here for bulls, plan B down here for bulls. You either buy it at 70 or you buy it at 72. And bulls got it. Okay, bulls got it. And where's the likely destination? Probably back to 82, son. We've been there before. Okay. Notice that it's just supply. Okay. Buyers, sellers. Buyers, sellers. Buyers, sellers. Okay, probably some sellers up here too, huh? So we'll see. We're just stuck in this range. Okay. You might want to use the moving average as support now instead of resistance. That was hard to see, huh? Still can't see it. This one, oh, because it's way down there, huh? I wonder if I should change the, can I see it better if it's, you want to make it yellow? Okay. So it's saying here A lot of waiting to do. La. Interesting. Let me put that other moving average back. But let's do the 21. Not the 55. Let's do the 21. Boo, 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 boo. Yeah, see, trending, range, 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 range. Anyone buying GM stock? Oh, no. I'm waiting for Mercedes and Porsche to issue pickup trucks. I want a Porsche pickup truck or a Mercedes pickup truck. I want a G-Wagon with a bed in the back. Not a bed, but, you know, a loading bed. Hey, they make trucks. Why not a pickup truck? They make lots of commercial vehicles. Anywho. So there's the S&P. Here's our nat gas. Let's look back at that. Okay, so all we did is get up to resistance. So we're testing that. It's not technically on, right, an uptrend based on price action. And if you're looking at the 4 hour, it's still technically bearish, but it looks like potentially it might want to roll over, but that's what it looked like when we were, let me get my drawing tool, when we were here and here and here. Okay, it looked like this. So notice that the MACD is below the waterline but rising, correct? I'll draw the MACD here. Oops, come on. At least try, Wayne. At least try, Wayne. All right, let me try. A MACD would there, and let's do an 80-20, and then do a water line. Okay, so if I were to, so this is the end, so this is MACD is about sideways but low. So we're probably, anyways, and could be back down like that. So we'll see. We'll see. Yeah, it'll probably, when we're talking about probabilities, you know, I would use this as the example of what might be happening now. It's a first real kick off the 55, so it could. Okay, it could if you want to be a bull, but you are really front running. Yeah, that was pretty funny, Richard. The whole audience laughed. That was pretty funny. Matrix, you probably need a futures broker. You'd open up a futures account, and you'd be long American nat gas and short European nat gas. If you're going to trade the spread based on the arbitrage. Yeah, James, there's the 6x6, James, but a buddy of mine had the G-Wagon squared. It was huge. It was bright yellow, black interior with yellow stitching, and he really liked it. It was too big to drive down a road. You could never park the thing. And then one day I said, "Hey, how's your school bus going?" And he sold it. As soon as I called it a school bus, he sold it. So you have to look at that. What was it? Mercedes G-Wagon squared. I think this is, he had, you have to see them side by side though. Like the picture itself doesn't do it justice. Here's an old one. McLaren of Boston has one. It doesn't do it justice. So you're like, yeah, that looks like a G-Wagon. You have to. It doesn't give you perspective. You have to look at how do you compare them. Okay, this picture here. And you might think this is perspective, but it's not. So there's your G-Wagon. You see it? And this one's twice as big. Like, it's wider. It's got like 30-inch rims, not your 20s, but it's got 30s. Like you could drive over a human and not even hurt them. You can lay on the ground and be driven over. Even the axles are special, where you got your wheel, and then the axles go up like this for higher clearance, and then it comes down, and then you got your other wheel, so that you have all this open air. So like, you don't have to worry about the differential or anything. It's all up there. You can deflate and inflate the tires from inside. So anyways, isn't it crazy? Wonder if you can see under it. I mean, look at it. To give you an example, when I walk by my Porsche, which is not a small vehicle, I have the Cayenne GTS Magnum, and my head is over the roof. That's how low and wide it is. And this thing is 1.5 feet taller than a man. Like, it really is a school bus, especially the yellow one. So, yeah, anyways. Okay, let's take a look at Bitcoin. Little bit of vol lately, huh? You're like, Wayne, what vol? Well, this is why I teach you on a 4-hour and 1 hour, or a 4-hour and daily. Check out this volatility. All the way up, right? Look at this. Higher high bullish engulfing, followed by lower low bearish engulfing, followed by 130% rally, followed by we're right back to where we were. Matrix says that squared is just a giant World War II vehicle. Yeah, no, I agree with it. Yeah, Yeah, the wheels are really something else because they're industrial, you know, like 12 bolt, 12 nut industrial wheels that you would find on a semi truck. But because it's a 4x4 and they drive it in the sand a lot, like I said, you can just hit a button and air leaves all the tires. So now you can make your wheels like half flat, which is better for driving on the sand. And then when you drive back onto the road, you stop, you hit a button, and all four wheels fill up with air again without you even getting out of the vehicle. And then boom, now you're driving down the highway. Yeah. Yeah. Yeah, that's cool. My Porsche's got the air suspension, so it's got that awesome upgrade. It's amazing. So I can raise and lower the vehicle by like 3 inches. And then when I'm driving down the road, it automatically goes really, really, really low. So it's an SUV. And like I said, the SUV probably only goes to like the top of my chest. And I'm not a tall guy, right? Which is amazing for an SUV. Full 4x4 SUV. So when you go 4x4, you just lift the whole thing up. And it turns into a proper 4x4. And you're like, it's so stupid. But it's cool technology. All right, so anyways, Natty may be producing that arbitrage that I taught you guys way back in July. And yeah, oil, just Oscar Mike here. Remember, the big thing is going to be in a couple of hours. We're going to get that whole change. The whole new info. So be careful with that. So it's bullish now. But remember, the trend right now is build. That's the current trend. Going to exotics, when that euro got, when the stock market rallied yesterday, we zipped around and went right back to where we were on the Mexican peso. By where we were, I mean, this is where I took profit. Do you guys remember that? I officially took profit, it seemed like a year ago. I guess it was 2 days ago. So I got plus 100% internal rate of return on my swap, plus 500% on appreciation. So this is actually, instead of swap, you can call it income. Okay. So the total on that was $600. Okay. On my $100 investment. So I got 600% return, which is nice. So I got my $100 back over the 3-month period, plus the $500, and then I exited and got my collateral back. Nice. Cool. Good trade. Look at that, huh? What do you think? Looks like a heartbeat or something, right? You're like, is that the heartbeat of a hummingbird? Just amazing, huh? Isn't that just the wildest thing? You think it's going to wick? Okay, and do you know what this is? I have it marked. And for the first time in quite some time, since December, we have a downward move. Do you remember what that is? I have it marked right here. See? No, 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 no. And we hit that price and a drop for the first time in many weeks. Why? It's the all-time high. Yeah. I don't even know where it is. Where's the other tries? Euro czar, euro try, there it is. Yeah, if you're short, you make a bajillion on swap. So Stingray, someone might or have already tried, no pun intended, put a short and just say, world's dumbest trade, but if it stays below that line, like what if that ends up being, once again, the all-time high, and from here it just farts around slowly dropping? Well, so like let's compare and contrast. I got 100% of my margin back in just 3 months on Mexican peso. Okay, so we got to look at, and that was against the US dollar. So you got to look at your USD Mexican peso right below it. I got paid 21, whatever that means. 21, and in 3 months, that value paid me 100% of my margin. The same type of trade doesn't pay 21, it pays almost 500. Oh my God. Okay. Oh my God. Oh my God. So what if you just kind of stick it in there, jam it in there, drop your stop, and just sit on that forever if you can? Now, obviously, peso and lira are worth something different. Okay? So I don't know what that translates to. Suppose we can try it. I don't even know if it's tradable. Is it even tradable? I forgot to look. I don't even know if it's tradable. Floating. Looks like it. Close only. No, it's not. Close only. Yeah, it's not even tradable. No. Yeah. Yeah. Well, there's no market. There's no liquidity partner. There's no other side of the trade. All right. So what do you want to do now? Some yen-yens or dollars? Matrix, you're like, you wouldn't want the volatility. No, you would jam it. That type of thing. Okay, I'm waiting for you guys to vote. All right, we got gold. Gold. Let's do some gold. Goldilocks. Okay. On the 4 hour, we are currently stuck on the 21. And I would not want to buy that. Not on that time frame. So you got to decide what time frame are you trading. Well, even if you bought this low, you're buying it at the 55, which predicts a move like this, or it predicts a move like this. So this 21 area, this, you see, like this is the 5 EMA right there on the daily, which is the 21 on the 4 hour. So it seems to me that there's a high probability of something like this. Okay, one of those two things for today. It would be if today turns out to be bullish for gold, it's going to jam up to here about 1900, in which bulls will take profit and bears can then enter their positions. Or today is a bearish day and this is today or tomorrow's sell zone. You should already know that. We basically already got today's hit. So you'd get this kind of move this way today. So I don't know if it's going to be, if tomorrow's bullish or if today's bearish. Those are the things I don't know. But the things that I do know is 21 is below the 55 on the 4 hour. So that gives you permission to be a bear. And on a daily, we're above, okay, we're above the 55, but below the 21, which is also not incredibly bullish. In fact, vulnerable to turning bearish. And what you're saying by selling gold is that we are going into or currently in disinflation. That we're in a disinflationary period where inflation was 10%, then it was 9%, then it was 8%, then it was 7%, then it was 6%, and we're probably going to settle somewhere between 5 and 4%. That's disinflation. That's not deflation. Because even if last year inflation was 8% and now it's 4%, what that means is prices are 4% higher than last year when they were up 8%. So prices are still going up. At half the rate, but they're still going up. It's still inflationary, but it's disinflation. Deflation is where you have negative prices. So your prices have fallen and are 3% lower. And it takes a while because if you imagine the roll-off, if you're just doing year over year, okay, then you need 10. Well, let's do 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All right, here's a year of inflation. So let's say we peaked at 10, then it went to 9, then it went to 8, then it went to 7, then it went to 6, then it went to 5, and let's say 4, and then 4, and then 4, and 4, and then 4, and then 4. Okay, let's say that's our year. Well, then what? Then all of a sudden, you get to a point where you're not comparing 4 versus 10, but on the 13th month, so we'll do it right? On the 13th month, you're comparing to 9. And then on the 14th month, you're comparing to 8. And then the 15th month, you're comparing it to 7. 16th month, 6. And you see how that's going to impact the math? If we were still at just 4, 4, 4, 4, 4, 4, 4, not 4 versus 10, 4 versus 9, but 4 versus 4, which means you have 0% inflation. Well, no, you don't have 4. You have 0% rise in inflation, right? And then let's say in 24 months, the Fed does something and inflation goes to 3 versus 4. Now you have negative. You have deflation. Well, we're not there yet. We're still accelerating. Prices are still going up. My big concern, and I've raised this concern before, that the vast majority of the disinflation is gasoline prices. And the collapse in gasoline prices was artificial. It was a manipulation of the supply and demand market, of the physical market. It was manipulated. It was unnatural. It doesn't represent demand. It doesn't represent the real world. Okay? Cool. Now, Isaac says gold going in 1926. Well, let me take a look at that. 1926. I don't have that number. If you said 1912, maybe. You're saying all the way back to, no, that doesn't add up to me. If we drop to 1830 and then you said up to 1926, I'd go with it. No, I'd have to say I don't agree with that number. Your choice as a swing trader, for example, is buying it off our bottom here, which is about 1860. If you're a bull, that's predicting a resumption back to the top in 1961. So 1860 to 1960. If you're a bull, okay, that's what you'd be planning. And I think that's a bit of a dangerous plan now. Unless you're going to treat this like a range. I mean, let's see, can you do it that way? No. So to do that trade now, you would have to throw out some of your technical analysis, but not. Oh, just a bullish number. Well, it can't be some random number. That's not the right number is all I'm saying. Even if you're a bull, that's not the right number. But if you're a bull, I would have to ignore a lot of technical analysis to get to do that. So I can't. That might be right, but it's not right now. So I would have to go with a probability of maybe we get down here, 1850, and then we stabilize, and then we roll over the moving averages, and then maybe we work our way up. But then that gives me a different number than what you're saying as well. That gets me 1980. No. See? No. So I think this is still quite likely for this week, but we just have so much going on here. Yeah, Isaac, but I wouldn't ask you to think that way. I wouldn't ask you to pick that number because it's 618. Look, my belief is nobody gives a damn. Oh, but the golden ratio, screw the golden ratio. Look, I don't care. Like, let's say, what does Fibonacci do? Help you get into the trends, right? So if you're a bullish trader, you want to buy dips. Okay? Great. So what Fibonacci says, you want to buy somewhere between the 382 and the 618. Okay? Why? Because the idea is buy a dip. Do you really care if it's a 382 or the 618? In fact, I could just say Fibonacci is stupid. The golden ratio is dumb. You could probably trade with the same effectiveness buying, okay, between 1/3 of the way down and 2/3 of the way down, and you'd be just as successful. Okay? What makes you successful is you're buying a dip in an uptrend. But it could be 1/3 or 2/3. It doesn't have to be some golden ratio. It might look good. Okay? It might look good, but the 1,000% convinced that if this falls and it's a Fibonacci number, great. It's not because of the tree branches on a cherry blossom. Or the outer shell of a pineapple. Or the skin on a sea star. And they're like, oh, it's nature. It's the power of nature. I think that's just ludicrous. Ludicrous. See, it's nature. The markets are not natural per se. These are nutcases, egomaniacs. It's an auction. It's an auction. It's a group of humans buying and selling. And so I don't get caught up in all of that kind of stuff. I like Fibonacci, obviously. But all you're supposed to do, guys, is if you're a bear, sell a lower high. That's it. You understand? That's it. That's all it is for anything. Maida says it works only because traders use it. Yeah, it's a self-fulfilling prophecy. But a lot of people don't use it right. A lot of people are still, let's say mediocre traders at best. So even though they're using Fibonacci, they kind of use it poorly. I don't believe you need that sort of degree of belief in a higher power or a golden ratio and it's all magic. This is what you need to do. If you analyze the market as being bearish, sell a lower high. I don't care if it's 33%, 38.2%, 44%, 51%. I don't care, nor does it matter. What matters is when you decide to get ready to sell a lower high, it's at resistance, not some magic gobbledygook ratio. Now, maybe it's helpful and maybe it's memorable, but it's not real. Leave it for your theoretical mathematical models. But look, if you need that to believe it, if you need the harmonics in the math to do what you need to do, and that's sell a lower high in a downtrend, then do it. But when you pick up a C star out of the tidal pools and you hold it up to the sun to hear it scream and say, "This is how I trade. This is why I'm a billionaire." Well, look, you're a billionaire maybe because you had the guts to trade consistently. And if a C star talks you into selling a lower high, then you deserve to pay that C star. Okay? Yeah, poor little sea star for sure. Okay? Don't call it a starfish. You'll be accused of being a whatever gen I am. What am I? Am I a Gen X? I don't know what I am. Okay, so anyways, look, here's how you make $1 billion. You say to yourself, I think this is bearish. Set up your trade. Today or tomorrow, you'll probably get a trade down. Just listen to the C star. Okay? Remember, sea stars are mean. You can look it up on YouTube. They have entire wars. A colony. Imagine 200 sea stars attacking another colony of 200 sea stars. It's in slow motion, but they speed it up, and there's a full-out war. It's pretty amazing. Okay? So anyways, sell the rip or buy the dip, and you'll be fine. And stay out of the range. Remember what I've told you guys over and over and over and over and over and over and over again, where I think I lose the most amount of money is in the range. Death trap. So you could, by theory, simply wait for breaks and then only trade trends. And how do you know when it breaks and starts trending? That's what technical analysis is used for, in my opinion. Is it trending up? Is it trending down? Or is it trending sideways? The number one most important thing is price action as a form of technical analysis, because that's a leading indicator. The second most important thing I like are pivot points. Why? Because they are also a leading indicator. And third, I love moving averages. Okay? They're lagging. Okay? But they're easy to see. And you can make it more complicated than that, but that's you. You do you. Okay? So I believe I'm spitting the truth. And I hope you appreciate that. I want you to simplify your trading. I think in the beginning, in your first couple of years, you're probably not that good at technical analysis. So you're trying to learn, and you're trying to learn a lot of different things. And you run into a lot of gurus, and you don't know who to believe. And after a period of a couple of years, you've definitely found 10 things that don't work, and then a few things that seem to work. and you scale back on the gurus and you narrow it down to 1 or 2 or 3 people. Okay? And what I'm telling you is when you're in this next period of mediocrity, I think you're likely good enough. But one of the challenges technically is you're probably overcomplicating things and you're focused on outsmarting the market. You're focused on beating the market. You're trying to be better than everybody else. So you got to get in earlier and all that kind of stuff. Because you're guessing, you're like, oh, I bet you this is going to go up now. And then I bet you this is going to go down. No, I just want you to sell lower highs in a downtrend. I just want you to buy dips in an uptrend. And if it's not trending, I really would like you to not trade. And we know all of that is easy, but all of that is difficult. Welcome to the paradox. The paradox of truth. So, hey, stop having fun. Get serious. This is work. I'll see you later, alligator. Richard Spencer, can you explain price action? Yes. Go to fxbootcamp.com, pay $88, and take the entire price action course. And you got it. So see you later, alligators and sea stars. Remember, that orange star in the FX Bootcamp logo is the sea star that knows how to trade. So the rip, by the dip. And if you're my day trading group, I will see you tonight at the Ring of 4 Bells. We like to get together right as the New York Stock Exchange is closing down. Peace on earth. Hang on. Peace on earth. May the pips be with you. May your profits be above average. Cheers. Pa-chow, 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 pa-chow.